All right, fellow AMC stockholders, XMAX Trading here. Let's go over some DD from investing.com. Go ahead and subscribe to the channel if you haven't already. Hit the like button and bell notification. Let's get started. Robinhood Markets, robbing from retail and giving it to Citadel. That's a pretty brazen title there. Robinhood is the poster boy for the craziest, most unregulated stock market since 1929. That went into tears. This one will as well. Wall Street on parade. Robinhood Markets operates a commission-free trading app that became popular in March 2020 with millennials and Gen Zers who fancy themselves as day trading geniuses. The company went public in July 2021 at $30 a share. Of course, it spiked up during its IPO when it came on the stock market, and we think it's manipulation. Hedge funds want to show us they're in control because nobody's buying Hood. Aside from the fact that Hood is symbolic of the biggest stock bubble in history, the corporate suite is riddled with fraud and corruption. Wow, that's pretty blatant. As it turns out, the trading service is not exactly free. The bulk of Hood's revenues come from routing its order flow to third-party trading firms rather than the stock exchanges. This increases the execution costs unknowingly for Hood's retail and stool pigeon accounts. What's a stool pigeon account? In Q2, Hood routed 34% of its order flow to Citadel, hedge fund, and brokerage, and 21% to Susquehanna options order flow. I didn't know that. As a former Wall Street junk bond trader, I can guarantee that Citadel and Susquehanna front-run the order flow by taking positions with buy orders, for instance, in the stock and options being routed to each firm before executing the Hood orders. The Hood orders drive up the price of stock and call options like AMC and GameStop. Citadel or Susquehanna then unload their front-running positions for a profit that exceeds what was paid for the order flow. The mechanics of this may be akin to scaling fish for profits, but aggregated over tens of billions of orders, it's huge. Free money for Citadel and Susquehanna. It's also easy to hide and hard for regulators to prove if they bother trying, because SEC doesn't seem to bother trying. But this one is one of the ways that Wall Street skims money from investors. Hood is not the only brokerage that does this, but Hood has built its business model on order flow payments, as 80% of Hood's revenues derive from order flow revenues. It was announced late September, SEC chairman, that banning payments for order flow is on the table. If this occurs, Hood's stock price will get destroyed. In June 2020, Hood was fined $57 million by FINRA in order to pay $13 million in restitution to clients affected by app outages and misleading communications in March 2020. It was the largest FINRA penalty in the history of the organization on Hood. In December 2020, SEC brought charges against Hood for repeated misstatements that failed to disclose the firm's recent payments from trading firms for routing orders to them, and with failing to satisfy its duty to seek the best reasonable available terms to execute custom orders. Hood settled the charges by paying a $65 million fine. So $65 million fine to SEC, $57 million to FINRA, and $13 million to clients. The day before this, Massachusetts Securities Exchange Agency brought an enforcement action against Hood for several regulatory violations, including aggressive tactics to attract new, often inexperienced investors and breach of fiduciary conduct. And there's more. Holy God, there's more, guys. 2 weeks ago, it was revealed the SEC was looking into whether or not Hood President CEO James Sorwart violated securities laws by selling out of his position of AMC shares just to have Hood placing a restriction on the stock trading. Where there's the smoke of fraud and corruption, there's usually a fire. In Hood's case, it's pretty obvious there are multiple wildfires burning. This is one aspect that makes Hood a great short. Hood's share price is extraordinarily overvalued. On the fundamental metrics, it looks like its business activity may be starting to slide. First 6 months of 2021, after adding back $2 billion non-cash charge for the change in fair value of convertible notes and warranties liability, I normally would include non-cash charges, but this particular charge is not a function of Hood's operating business. Hood's operating income was just $123 million. Giving the company the benefit of analyzing that number, there's a good reason to believe it will decline. Hood's operating income could be $246 million after the provision for income taxes. Hood might generate a net income of $148 million. On this basis, based on October 1 closing stock price, Hood's market cap was $36 billion. It's thus valued at PE of 247 times. PE of 247x and 16x revenues, assuming revenues in second half of 2021 are equal to the first half. It's beyond comprehension that anyone would pay those kinds of multiples for a cockroach-infested motel like Hood. But such is the nature of extreme stock bubbles. Away from the potential regulatory and legal issues Hood faces is likely and will likely face, there's plenty of reason to believe that its operating business activity will begin to deteriorate. Keep in mind that Hood is 100% retail-based. Its business activity soared with the stock market crash during the peak of the virus. As crisis as millennials and Gen Z flocked to Hood's apps of getting rich by day trading meme and tech stocks on their parents' couch. A lot of millennials are not on their parents' couch; they're in, studio apartments. And Hood added the ability to trade cryptos, which is also heavy retail based. According to Apatoa data, the number of Robinhood app downloads in Q3 is down negative 78% from the second quarter of 2021. Q2 of 2021. This compares to the drop of around 50% for Bitcoin, Coinbase, Global, and other crypto apps that rode the retail trading trend. In addition, Q3 activity users proxy has declined negative 4%. This compares to 20% decline in crypto peers and 30% for Schwab. As stocks bubbles start to pop from 1999, 2008, retail stock speculators start to lose interest in the market or try to buy the dip until they destroy their account. Most ultimately get wiped out. When Hood reports its Q2 numbers on August 18th, it warned they expected lower trading activity and lower revenue. Considerably fewer funded accounts compared to Q2. The company also warned twice of a slowdown in crypto trading revenue. Hood IPO on July 29th, just a little over 2 months of trading data. The chart. It has a continued market turbulence, which cannot start down to $30. If the stock suffers an accident this month, Hood could go down below 30. There's a concept of regulatory torpedoes being launched at the share price. Of the 875 million shares outstanding, insiders have dumped 464 million. In addition, 98.7 shares connected to a convertible note owned by insiders will be dumped once S1 registration becomes effective. Finally, another 567 million shares will become available to sell by insiders as lockup restriction expires. Oh, let's not look over the fact that ARK owns 5.5 million shares and has been adding more shares recently. ARK's endorsement of Hood makes it fabulously short without knowing the long list of fundamental negatives. Robinhood seems like a no-brainer. If the stock market falls into bear market, Hood will get below $10 and below $5. For now, the shares are hard to borrow. I have a big question. You can already puts. I have a big question on December 30 puts. I also might throw some May 2025 $35. Shorting the long date OTM strikes is like taking candy from a baby. Once the above mentioned lockup expires, the stock will take another leg down, and shorting out of the money calls will pay off handsomely. Shorting out of the money calls. So what? Selling calls against Robinhood long term, selling the calls, not buying puts. Hood will report Q3 numbers in mid-November. It reported Q2 numbers August 18th. There's a good chance it will miss estimates. I'm guessing it will report Q3 either Wednesday or Thursday, November 19th. Options series expires. I may buy a small amount. Yeah, not financial advice, but yeah. So yeah, pretty interesting, guys. Investing.com, look at AMC. AMC $4, so it's after hours about 39.90. So Friday might be sideways, unfortunately, but AMC Overnew. Volume 67 million, average volume 78 million, 1 year change. 1 year change about a 10x, a little over 1,000%. Market cap, PE ratio, not there. Sure, that's 513 million. Revenue 875 million. Earnings EPS still negative 16. Beta 1.42. Next earnings date, November 7th. Chart. Amazing tentacle setup. Apes are there. Financials. They retired some debt. Income statement. Look at this. September income is going up. 148 million, 447 million. Total revenue. Okay, revenue is going up. Net income still a little bit is getting less and less negative. Gross margin, operating margin, net profit margin, return on investment. Total revenue. It's improving. Yeah, it's improving. Income statement. Balance sheet. Not reporting cash per se. Cash and equivalents, about $1 billion. It's pretty impressive. Total receivables net. Total inventory. Properties. So they got properties. Accounts payable. Payable accrued account expenses. Cash flow. Earnings, so revenue. Revenue is going up. Earnings per share forecast negative 0.17. August 29. Things are improving, guys. Things are improving. All right, so next time.